Hey, it's Bob again here from Trade Genius, and I wanted to talk a little bit more about some of this extreme positioning. And what I wanted to do is kind of lay out for you a case. It's all about keeping the narrative that the economy is doing great, and the biggest display of that is the stock market. And Trump has invested quite a bit of political capital of showing great jobs, great stock market. He's not going to let this thing fall if he can avoid it. And there's a lot of people with a vested interest in doing it as well. And one of the ways in which they do that is they sell volatility short. Okay? And when they do that, it forces other algorithms. There's these risk parity trades out there that basically say the less risk that is showing in the market, the more exposure you can have to equities. And if you see here, since July, this thing has been on a tear. This is why it's been so hard to short the market, is that they have funds coming in at the end of the day buying the market because their algorithms are telling them that it's safe to do so. You got to realize humans are out of the equation now. It's all robots, and robots just look at math. They have no soul. They have no intuition. They don't recognize guile. They don't recognize manipulation. All they see are numbers. And if the number set says buy, they buy. And this number set is saying buy like crazy. And this is the worst it's gotten. And remember what happened as it started to unwind this thing. This is when we had the collapse of XIV right in here. And then now they're doing it again. This is in fact the lowest we've been in 2018. We're rapidly coming to the lows here. That's one way in which they force money into equities. The other place they do it is in treasuries. And what's happening here is really interesting because they've been now there's the funds are short and short. I mean record shorting of the bond market. And what they want to do when they short the bond market is that you force people out of bonds and they go into the stock market. They have to be invested. They don't put it in cash. So that's an old trick. Force money out of the bond market so you can put it into the stock market. At the same time, smart money is moving into bonds. And look what's happening to the 10-year right here. Is that you have the 10-year right here, TNX, is formed a top here. We talked about this before. This thing breaks down and it breaks this line right here. We're going to 2.50. Let me show you here. This is where we started this rise. Okay, trying to force money out of the bond market and the stock market. But if those speculative shorts, the funds, have to cover that bond short, this thing will drop like a stone. When it drops like a stone, money will come out of the stock market back into the bond market, because the return will be fantastic. I mean, if you move this thing down from 2.8 to 2.5, you're talking about a 10% return here in short order. And these things are leveraged. These bond funds are leveraged. So you're talking maybe potential 20, 30, 40% returns for people in a couple months. With the stock market unable to make new highs, money's going to be flowing into the bond market, out of the stock market. So just keep an eye on that. That bond shorts blow up, stock market's going to cause some issues. Good news for those who are trying to refi their homes. Anyway, it's Bob, Trade Genius. My next report, I'm going to talk about gold, silver, and the miners and what's happening there. Equally crazy positioning there as well. Talk to you guys soon. Bye bye.